Hey, we're live. It is February 15th, 2024, and we're in the midst of some dramatic events. And by dramatic events, I'm talking about Valentine's Day yesterday, for those of you who forgot. And those of you who even celebrate it, because it's not a real holiday. Let's face it, it's made up. But if you missed it, today's your day for redemption. I don't know. Make up some lame excuse and buy some flowers. On another note, Bitcoin's been in a huge rally, so this is going to be a very interesting talk, very timely. The topic is managing short options. So all us short option sellers are all lamenting our lives right now and constantly checking our phones because it's a big move. Not wholly unexpected, but it was a little unexpected the way it played out in my mind. But that's the way the market always works, doesn't it? All right, so let's see. We got lots of people coming in still. If anyone can't hear me for some reason, please just let me know. I assume you can. As always, please put your comments into the comment box on the right-hand side. There's a Q&A section there as well. Please add your questions to the Q&A section, and we will get to that at the end of the show. G. Andrea, Valentine's Day dramatic event. Great. Yes. See, I forgot my glasses. I lost my glasses, so I'm kind of struggling to read some kind of. If I'm doing this, it's because I can't see it very good. Richard's going to have to pick up the visual slack. He'll be my seeing eye trader.
Yeah.
Yeah. All right. We still got a few more people rolling in. Great. Fantastic.
He's referring to the uptick we had on yesterday. Was it Valentine's Day yesterday? Yeah.
Yesterday was Valentine's Day.
Yeah. Just what you need, isn't it? After a little sell-off is another $2,000 rally.
Well, the thing is people would be out for like Valentine's Day dinner or something, and they look at their phone. They're like, "Oh my God, I got to get to my computer, honey!" And you run out of the restaurant. So they probably ruined all kinds of people's Valentine's Day. Anyways,
if she gets upset because you're trying to make money, she probably isn't right for you.
All right, and on next week's dating advice, I don't even have anything clever to say. All right, so let's get started. Deribit Live, of course, we are the Rogue Traders. I'm Shane Oglow, my partner, Richard. Today's agenda is we're going to take a quick look at the current market. Well, I'll take a look at the charts. I don't have much on there because I've got a million positions. There's no way I could possibly edit to the chart and make sense of it. We're going to take a look at our current trades and strategies that are applicable right now, what we're doing. And the real topic is handling short option pain, because I suspect a lot of you out there who are option sellers are probably feeling the pressure. Equity's probably down. Your US dollar amount, even though Bitcoin's going up, you might see your US dollar amount falling. That's what happens sometimes if you sold a bit too many calls and you get a big move. Don't worry, we can get it all back. We always do, but it's painful. It's painful. Well, there's some tricks to getting it all back, and that's what we're going to cover today. We're going to talk about handling those short options. As mentioned, we're the Rogue Traders, roguetrader.academy. Hey, check us out. If you want to hang out with us every day, we've got interactive live Telegram channel where people can ask us questions. We can chat during the day. We've got a weekly Ask Me Anything call. We've got courses, all kinds of different courses that we have for different aspects of trading. We try to get very specific. And we've got a daily live stream too that we do every day on Patreon. And we keep saying it's coming to OnlyFans, but we can't seem to get the account approved. But it will come someday. We'll be on there as well. So if you just want to check us out on Patreon, $60 a month, you can. We live stream every day as we trade a fund, a Zigdao Rogue Trader fund that we trade using the Deribit platform, and we show everything. We talk about everything, and sometimes even make a joke or two on there. All right. Let's get started. First things first, what I think I'll do is I will share my screen. I see some questions. So Vladimir, it's fast on the questions.
Yeah, I've flagged it, don't worry.
All right.
I can share my chart if you want to.
I got it. I assume everyone, can you see that, Richard?
I can now, yeah.
Okay, great. ETH. So ETH, moving up in sympathy. Yes, there's some people probably front running the idea of the ETH ETF. That's probably going to happen. Geez, could this thing explode and be at $6,000? Who knows? Yeah, probably.
I kind of was reading that because fewer people know about ETH than Bitcoin, then the impact of an ETF might actually be bigger than the one on Bitcoin, because it could be that there are people who don't have ETH that will get it now.
Yeah.
On the other hand, they could all be tapped out from putting money into Bitcoin. So,
who knows? Yeah, I still expect.
Actually, it occurs to me: could there be scavenging? Could we suddenly get a massive dump in Bitcoin because people are pulling money out of the Bitcoin ETFs to pile into the ETH one? Man, that's going to be. I think we're going to have volatility.
yeah, I think so too. And it doesn't take. I mean, you get a lot of ETH for each Bitcoin. So, anyways, yeah, all good. So I don't have any trades on there right now, but let's take a look at Bitcoin. As I mentioned, I didn't put anything on the charts because, man, I've got positions up to yin yang. Was I crazy short calls on the way up? No, not crazy short, but I was short calls. I had to adjust some things. Absolutely, starting sort of the mid high 40s up to the low 50s. And that's what we're going to talk about today. Where did those go? Well, they went down into puts, into March, into April, into May, touch into June. I'm storing them there. Richard's going to get into that later. We're going to store some value in the future and bring it forward. And I did rewrite some calls. Same thing, high 50s, 60s, 70s. Just depends. As usual. When you're rolling up and out, it kind of ends up looking like a cone, right? And same thing when it goes down, kind of a cone, right? Because you get more value for those longer dated, so you can have higher strikes, further date, and get just as much value for those strikes. So that's pretty much. I really don't want to get into that too much today because there's a lot to cover with managing short option positions. It doesn't matter if it's calls or puts. We could have been going down crazy. It's a little different feeling and it's a little different effect on the account. But let's just talk about managing that short option pain. Now, just before I get started though, in the chat, if you don't have a Deribit account, check out the link there. Save 10% on Deribit fees. Do us a solid. And check out our offer too. If you want to check out the offer we've got going on at Road Academy. But I do have a little poll today. It's a very simple little poll. And I think it's on everybody's mind. Everybody's got a different opinion. And it is, well, Bitcoin. Oh, I made a little grammar error there. I'm going to blame it on losing my glasses, but it's Bitcoin. You know what? Last night, I think that was probably be a good name for it because I was like, looking at my phone. But one direction only. What do you think? Up with only some, maybe some minor pullbacks for the next few months. And the reason I say the next few months is to get us through the halving, which is going to be sometime in April. And yeah, do you think it's just going to keep going up and up and up? Some people think it's going to go up and up for the year. Some people think, no, we're going to have some pullbacks. And there's a few interesting things to note about that. Richard has shown, I think, the last 3 weeks, maybe even since early January, most of our calls, he brings up some options data and he's looking at the open interest. And, back when we were in low 40s, there's a lot of open interest, at 44, 45. And there was a lot of open interest at 50, even though we were, $7,000, $8,000, $9,000 away from it at the time. And we knew it was going to be a magnet. And sure enough, it is. So now we've punched through it. So the question we have to ask ourselves is, where are the market makers? Where's their gamma? And the people who were short, and this is always the same. If you've got a gazillion people selling the 50Ks and it goes up through it, well, what are they going to do? Are they hedged? Have they hedged everything off completely? Did they hedge with spot or futures? Or did they buy protective calls? Who knows? Some people did, some people didn't. Some people have more coverage. Some people don't have enough coverage, whatever. But the point is, if Bitcoin tomorrow keeps going up and we're at 55 or we're at 60, what are those people going to do? Well, they're going to have to eat a big loss, or they're going to have to manage their position, which is going to do what? It's going to put more pressure on the market because they're going to manage things by buying more futures or buying spot or buying calls, whatever. It's going to put that pressure, that upward pressure on. On the other hand, let's just say everybody was super responsible and said, you know what, I'm going to sell these 50Ks, but I'm going to be super careful. And they're all hedged. They don't care if it goes up. Well, I would expect maybe a big pullback to flush people. I don't think it'll be a long-lived one, but a quick move down $3,000, $4,000, $5,000 to scare the pants off some people, I could see that. I'm not sure. So what do you guys think? Do you think that we could have a pullback? Because our long-term idea is probably the same as 99.9% of everyone else out there. We're probably going to keep appreciating in price during the course of the year. That's most likely. The question is, are we going to have some dramatic pullbacks? Maybe it'll last a few weeks or a month or two. Who knows? That's the question.
So it's worth saying that you can be absolutely right on trend, but the details can kill you particularly if you're trading in size.
And particularly in options, because they've all got a time limit to them. So it's not like you can just sit there and hodl the damn thing, right? So,
we were talking about how to manage this.
Let's talk about managing the short options.
This reminds me of 2005 when I was short calls on the FTSE 100, just continually rolling, and I was just rolling to calls, and just getting in the money every month. And in the end, I built up a massive bill, which in the end I just gave up and stopped and just didn't roll 1 month and just took the loss. And I learned some big lessons. That was like 20 years ago. I learned some big lessons there in how to manage positions, because you kind of in theory that you should just roll calls to calls, and eventually there'll be a pullback, and you'll be able to reposition, sell puts again, and you're out, right? Or you can reposition and you're done. But actually, Bitcoin particularly, and indexes often, just get a real head of steam on it, and they do not want to stop. It's like trying to stop a runaway coach of horses, right? And the thing to do is just kind of get on board with it and run with it. But we still want to be wary of the pullback. So we don't want to just swap all of our calls to puts and just have a problem on the put side, because sure as eggs are eggs, right? The moment you do that is the moment everyone else is doing it, because you're feeling the same pain as them, and suddenly all the market makers rehedge, and boom, our market goes down. So what I've been doing on my account is just very carefully rolling calls out for time, but actually rolling them into strangles, and then always making sure that I'm rolling to a higher vol. And I'm mindful that vol might continue to rise, but I just keep wanting to take in a bit more premium than I spent. And as you rolled your call into a strangle, and actually you cover the trades as well, of course. And what you find is that at some point, if it keeps on going up and up and up, the puts get to a stage where they are almost worthless, and that allows you to buy back the put side. If you've still got room in the call side, you can leave it on, and you can take a call from somewhere else further out. So, for example, let's say we're looking at April, but we've got some short calls in June. If we buy back an April put, then we can actually take a June call, buy it back, and replace it as an April put, for example. So we're actually bringing that risk forward, and we're balancing off the calls and puts, and removing one bit of Vega risk from our book. Actually, probably a better example would be currently March, or even end of Feb versus April, that kind of thing, right? So, so the initial reaction to an explosion in vol and a big move in the market is, okay, I've got to get rid of my positions. I've got to get it out of the money or away from the money. I've got to do something, right? So I'm going to pay the vol, the short-term vol, to do it, put it into longer-term vol, and then I'm going to look for opportunity to start bringing that vol back forward by replacing the positions on the wrong side. So that way you can just start teasing back that money. The whole game when you're a short vol is not to give up intrinsic value. You've sold your strangles or your buying condors or whatever you're doing, and you've got cash in your account, and you're trying like hell not to give that cash back. So you're looking for any advantage you can take, and the one thing that's going to force you to give that cash back, the only thing actually that's going to force you to give that cash back, is when you run out of margin. So you're looking to minimize your margin spend at all times by finessing your account to move positions back and forwards, in and out. Always move your short positions towards the highest vol. Always try and buy your cover at the lowest vol. and just finesse it, even just 0.1 of a Bitcoin at a time, to minimize that margin use. And in times like this, I mean, I think my home account is up to 60% margin use, maintenance margin, which is way higher than I like it to be. And intraday, it even goes up to 65, 66, and I just get in there and I do just a few finesse trades just to get it back in. And I'm spending trading fees, so Deribit's happy with me because I'm doing what I'm supposed to do as a good punter. I'm staying alive and I'm paying them. Every single trade I do, I'm just trying to take a little bit of a credit on that trade. It's a little tiny 5 bips, 10 bips, just to pay the trade fees and not lose my intrinsic value. So I think I started that account with intrinsic value of $45,000, and it's currently at $70,000 intrinsic, but still only at $45,000 value. So there's like $30,000 there, waiting in unrealized. Well, I guess you could call them unrealized losses, or you time value. And I'm just and I on the one hand don't want to just leave it because I vol could go up and we could carry on blasting up, and I could end up a margin call very, very quickly. At the same time, I don't want to fiddle too much because I want to give the book time to give you that value back as time value.
Yeah, I think that's a really good point. Is the thing you have to do is don't give up that intrinsic value. So now the standard, you're brand new. Well, just like you did back in 2005, is you've got some short calls in the morning. Well, you roll them out and up. So out in time, up in price, and the market keeps chasing you. And you can do this game. Eventually you're going to win that game because no market's going to keep going forever. But it can
there's a term for it, right? It's called the martingale strategy, which is where you when you're playing roulette, you always double your bet if you lose, right? Because eventually you'll win. But you're going to end up spending 2 to the 36 dollars in order to win $1. It's not quite as bad with options, but
yeah, it's nerve-wracking, and you're right. The only thing that you need to make sure you do is manage the margin, because if you manage your margin, you can keep doing that for a long time. But instead of doing that, what we try to do is, so for example, if I have something that's getting close to the money, a position, let's say it's a short call, it's getting close to the money, I'm going to do my best to keep that risk in the same expiry. Now, if I just roll that out to some new calls, I'll probably have to sell 2 for every 1, and I'll get a little better price improvement, and I'll give myself, it could keep chasing me and pushing me. I can strangle that out. I can sell some puts and some calls. So turn it into a strangle, same expiry if I can. Or I'll do that in a combination with other things. Maybe I'll take some of that value and I'll roll it out a few days, a week, whatever, in some calls. Maybe I'll put a small strangle on the same expiry, because let's say it stops moving right there. Boom, you can pull some of that risk off right away. Instead of putting the risk in the future, you want to get rid of it as fast as you can if it's worth it for you to do so. So we start to think of, okay, if we think Bitcoin is going to keep ripping to the moon, what are we doing with these short calls? Well, some we're going to move out to the future because it's, I don't think there's going to be one candle up to 100K. It's going to take some time to get there. Stranger things have happened, and it's Bitcoin, so who knows? But if we're all thinking that the damn thing's going to keep going up, well, it makes sense to sell puts. So we'll put that value into short puts. As it keeps rising up, those will decay. And Richard and I, if you follow our live stream, we're always putting those covering orders in on puts and calls. If we've got short ones, we'll put an order in at 11 bips or 5 or 3, whatever. And as the market goes up, you can hear Deribit little ding, ding, ding going off, ding, ding, ding. That's your risk coming off. That's profit. Yes, you might be getting hosed on some short calls. You're going to have to manage, but you just made a bunch of that money back on short puts. The danger, as Richard said, is, well, if we all pile in all these puts, well, guess what? Market maker is going to re-hedge, and you might get hosed, and you'll be chased one way and chased the other way, and it's not fun. That's why everybody loves to strangle it out. If you can sell puts and calls, and you don't have to do it in the same proportion. You can do, 30% of the value in calls if you're still leery on the upside, and 70% in puts, whatever. You can mix it up. You can do some the same day, next week, next month. Put some into April, for crying out loud. Whatever you want to do. So I think that's really, really important. And just before this call, I was talking to Richard about one of our accounts, and I was saying, we've got some calls that are in the money I need to deal with, which I did. I threw them out into June, and we'll get into this in a minute. And the reason I threw them into June is because I wasn't happy with some of the expiries. It's just a place to park it. It's high vol. I parked it. We don't plan to holding those until June. We're going to bring that risk forward at some point in the future when it's advantageous to, but we can park it there for now. We're safe. Yeah, we do have more Vega risk, but we're safe. I was saying to Richard, I said, maybe I'll throw it out into April or March, I think. But Richard pointed out very clearly, and we can look at the vol surface too, that there's a big difference between the two. And as Richard mentioned earlier, you generally want to roll to where the IV is highest. You're going to get more bang for your buck. That doesn't mean the IV is not going to keep going up, and maybe we'll be at 70 IV at the end of April. I don't know. But right now, we want to move that risk to wherever the IV is highest. And you always kind of want to be cognizant of that if you're kicking it out into the future. Sorry, was there something you wanted to mention there, Richard? Oh, I can't hear you.
There we go. Can you hear me now?
Oh, I can hear you now. Yeah.
I was just going to say, if you take a look at this April, this is April 26th, you can see that the 12 delta, roughly 10 delta calls are trading at 69 vol. Yeah. If you look in June, the 10 deltas, 12 deltas are trading at 70. Oh, 70. Oh, it's changed. Sorry, this morning it was inverted. The Aprils were trading at higher vol than the Junes.
I think you told me it was a March versus, or was it an April versus June?
It was April versus June. Because I commented, that must be because of the halving. There must be some vol around the halving. But that seems to have interestingly evened out. For sure, you're going to see lower at the moment. You're going to see lower vol in March than you are in June.
Sure.
64.
Hey, would you mind bringing up the volatility surface? Because we had some. Because you'd mentioned it doesn't match the market, but actually maybe it did because
it does now. Yeah,
it changed.
I think I was just caught it at a bad data moment. There's a bit of a bump there. That's April. Yeah, but it just comes off there. I think it's just a small anomaly. I think it matters. What I was going to say was look at the devol here. Through October, so we had the same situation in October as we had now, but it was actually worse. In October, I actually had to give up some of my intrinsic value in order to stay alive during this vol up. We're going up vol 34s up to 70 at the peak, wasn't it? So that was quite a tough rally, but it was quite a short one. And then through December we had a similar thing, but of course the positions were smaller, so we all sort of did okay. Well, we survived, and then when the vol does finally break and come down, we made shit tons of money, and we're all back in profit, only to repeat the cycle all over again. But I remember saying to Shane, you know what, we're only going to go for half a basis point a day now, and we're thinking that was a conservative, but actually it's aggressive. So I think next time we'll go for 10 basis points a day when vols are low. Anyway,
well, you know what's really funny in TradFi, in certain markets in TradFi, we have hard and fast rules. Unless the vol's above X, we simply won't sell options. But we tend to deviate from that in Bitcoin, and you know why? If you only trade in one asset, if you just trade Bitcoin, you're sitting around going, I'm making $20 a day or $80 a day, whatever it is, but I want to make a little more. Nothing's happening. It's only one thing, and you tend to overtrade.
Yeah, it's for sure. Actually, I've got a rule in right now. I will not sell calls for less than 60 volt, and I will not sell puts for less than 45 volt in this market until the ETF inflows have abated. That's my sort of personal rule. So for me, I'm just managing margin in it now until I've got spare firepower, and then I'll opportunistically jump into the market during this rally, and of course stay long the underlying. But we've rallied up from what 42 to 56 vol, and that's quite a big rise because as vol increases, you get an exponential rise in the price of your options or in the time premium of your options. Or maybe not quite, but exponential, but it's not linear, right? So it's quite aggressive. What I wanted to say is that on the Bitcoin markets, you tend to find that because most people are trading calls, not puts, you tend to find that as the market rises, the implied vol rises, and as the market drops, the implied vol drops. And the reason I finally got to my point, which is that if you're rolling a long-dated call into a short-dated put in order to match another short-dated call in order to rebuild a strangle, this is actually an okay trade because you're selling put vol, and even if the market turns and does come down, the implied vol of those puts is going to drop. So you're going to get out of your calls, and then you can if you have to, you can split that put back into a strangle and start again, right? So while we are a bit terrified about being shorter puts than we are calls at the moment, that terror is slightly abated by the fact that we know that if this market does stop going up, even if the market stops going up, that vol's going to drop right back down to 42, right? And suddenly we're out of all of our positions, or we're able to capitalize on we're out of half of our positions and we'll be back in profit. So and it's worth keeping an eye on the velocity at which the vol is rising as well, because that's
yeah, and I think that me personally, I think I expect vol to keep increasing for a while, or at least not having big pullbacks.
Well, it depends on. So I think. So the historical vol is 40, right? The implied vol is 50s. So actually, if you're delta hedging and selling calls, you should be making money, and any market maker selling you that those calls is losing money. So the fact that those calls are trading at that price kind of tells me that people are still struggling and still having to exit positions that they don't want, and so there's buy pressure there that's artificial. So actually, and I just have this feeling that because we've had this whole shenanigans over Christmas as well, probably the market's not quite so many aggressive people in it. I know that we became less aggressive, and I'm sure other people have as well. I'm sure everyone's a bit more cautious. So actually, I think it's entirely possible that vols stay elevated but don't actually run away because there isn't going to be so much liquidation pressure on the upside.
Yeah, we'll see. One last point too I want to make before we get to a couple of questions because we're out of time is I think you sent me an interesting article the other day, Richard, and it was talking about ETF demand simply outstripping supply. There just wasn't enough supply. And that was very concerning to me. I was like, my gosh, well, what if ETF pricing keeps going or demand keeps increasing? We're going to be at 70K at the end of the month? I don't know, right? Yeah. I mean, if the markets get thin and there's no one selling, and the question is, who's selling right now? Yeah. Are there some miners selling a little bit to pay for costs? Sure, but I don't think that's going to stop the market.
So I think it's really bookmark this site or one like it and keep an eye on this. This is the sort of marking. It's a day late, but that gives you an indication of the net inflows and outflows in all the ETFs, and we can see that the big one, the grayscale here, has now been almost sort of fully liquidated. Everything that was going to be liquidated. It has been probably. There is still a couple of liquidations to come through. Is it the Fed or the SEC?
The Fed seized the bitcoins.
Yeah. So be aware that will happen, and they probably won't care about what they do to the market. In fact, if they damage it, they'll probably be happy. But what I want to say is, and this graph too, this gives it in a line graph format.
We've only got a couple minutes, but
the moment that this gets to zero, i.e. zero net inflows into the ETFs, I would expect all hell to break loose on the downside. So I think it's really worth watching.
It'd be interesting if someone had predictions on timing for that, but I don't know how you'd
not for a while yet, because only the allocators will know whether they're going to allocate or not. But
Yeah.
When that gets down to zero, well, but by the time this happens, we'll all have forgotten, right? And we'll all think, Bitcoin just goes up, and then quietly in the background, that graph is going to gradually slip down to zero, and then suddenly no one's buying Bitcoins anymore, and then we'll get an interest rate rise, and then we'll get a recession, and then people will be liquidating their Bitcoins like bastards to pay their bills, right? And
that's always the way it goes. Just imagine, let's say we get up to 80 grand or something in a month or 2 or 3 or 6 months or something. And these things happen, a $20,000 pullback to 60 or 55. Why not? Easy. And that would beat the pants off some people. So you got to just be aware. You got to be aware. And we got a couple of questions here. We have run out of time, but I'll get to these. Vladimir, if I'm able to hold my delta neutral for free, assuming I can do that, can I treat Theta as my daily income?
On average, yes. Well, it depends. If you're delta hedging to zero on a periodic basis, then it's going to depend on the difference between the implied vol that you sold at and the realized vol that you're actually realizing in your hedging. And so if you sell your vol too low, then no, you're just going to make a loss. And if you sell your vol high enough, then you will make a profit. But you're not going to keep all of your Theta for sure. You can, if you're selling 10 vols above the implied, the realized, you could probably count on keeping half your Theta.
It's reasonable. Question from Stan. He says, what do you think? There are times in the market when you're better off selling puts and not selling calls, or times it's better to sell calls and puts? There's some periods when you can sell both.
This is a very simple question, and the answer is yes. There are times when it's best to sell puts, and there are times when it's best to sell calls, and there are times when it's best to buy them. The trick is knowing what that time is, and that requires you to be able to see the future. So unless you can do that, we find that selling both means that you at least have some firepower when you're wrong.
Yeah, and you could use things like the volatility surface and the skew to give you an indication. Is maybe do 70-30 or 80-20 or 60-40. You can adjust that, but don't forget you can always adjust those positions too, and you can move them. If all else fails, you can go onto Amazon and you can buy the magic 8-ball, and you pick it. You just shake it, and then it comes up on the bottom of it, and it will confirm what you need to do. Of course, I'm being silly. It's a good question. I mean, but I can. At the end of the day, you just never really know. You just never know. It depends on what's going to happen in the future. Do we have
from Alex? Is there a one-click roll functionality on Deribit? There kind of is. If you look at my shared screen, this is a combo, what they call a combo trade, or what I'd call a strategy trade, where you can actually construct a trade, which is a buy and a sell, or a sell and buy, or multiple legs all in one, and then you can go and get an RFQ on that. That's within the Deribit platform. Now, unless things have improved, I've found that whenever I've used this, there's not been a great deal of liquidity, or the spreads aren't brilliant, and you end up paying the same as you'd spend just executing 2 legs anyway. Hopefully that will improve over time. If you want to do bigger size, if you can do it in size 12.5 Bitcoins or more, then you can do it via Paradigm and block trade it into Deribit. But I'm hoping that this screen will get more liquidity soon. I think that's something that Deribit really need to work on, because as far as I'm concerned, I find it really boring to have to trade 2 legs, and I'd much rather get my trade through atomically and actually only pay a fee on 1 leg, and all the rest of it. But I think liquidity is picking up in this screen. So you get here by doing strategy and then combo books and then BTC, and then you can create your combo.
Yeah. I do things manually, Alex. I've never had too much luck with that functionality, but as Richard said, we're hoping that it becomes more popular, and you can put out the RFQ, the request for quote, and count on that being filled. But it is a little bit different if you're used to trading options on Tasty or some of these other developed TradFi platforms. They've got that super fast functionality. Deribit does not have that yet. Okay.
You think, Alex, again, do you think BTC options market large enough to provide stickiness around large open interest of takers? Absolutely, yes. We spend a lot of time looking at this screen, options data, and then the bottom down here, you can see where where is it? You can see where the open interest is. We care about this, particularly when vols are low and people are getting complacent. Now, probably not so important because everyone's terrified anyway. But you can see right now that the majority of the open interest is in March. with a bit less in Feb. Is that Feb? Yeah, actually coming up. It's going to be quite a big expiry next week. And a massive open interest at 50k. So we've just blasted through 50k. So that was, there was clearly a bit of gamma helping us to push through that. And our next wall is at 52, 50, probably 60. Right? I imagine people are long. I imagine dealers are long gamma here at 50, 52. I'm thinking. So it feels a bit sticky. Oh, it did feel a bit stickier. Oh, it's still pushing. It is pushing up now.
Yeah, I could hear the trades going off. So something's going on.
Yeah, but yeah. So in flat markets, yes, it matters a lot. At the moment, probably not.
A question from Gene: are you going to switch to linear options once Deribit adds them in March?
I'm probably not until the ETF rally is over, because I am happy to pick up the underlying. But afterwards, probably yes.
Yeah. A question from Andrea: is it possible to make those adjustments also with 0 day to expiry options? And yeah, it is. You're just not getting much for it, because a strike or two away is practically worthless. So when it comes to 0 day to expiration, you're probably gonna have to roll it into the next day or 3 days or something to find some value. Yeah,
we generally find a day or two is enough, isn't it, to move around about $1,000 or $500.
Yeah, you're right. I see Bitcoin's moved up to 52,600 or so. So it has been a move. Hey, I think we're out of time here. We've gone over limit. Sorry, guys. I see, Richard, you put that link in there for people to. That's for the inflows and outflows.
That's the ETF inflows and outflows. I think it's worth keeping an eye on.
Yeah, for sure. All right. Hey, everyone, we're going to pack it up there. Thanks for joining us. Always great to have you with us. And let's see what Bitcoin does this week. Oh, hang on. The poll. So quickly, let me end the poll. Bitcoin, one direction only. 72% said, yep, going up. Hardly any pullbacks. But interestingly, 27% no. They think there's going to be some pullbacks and not be crazy. And when you're in the middle of a huge run, it just seems like it's unstoppable. It's going to go forever, and all hope is gone. But it never usually works out that way. So interesting results. But again, thanks everyone for joining us. Always great to have you with us, and we will see you again next week.